Hello, this is the TradeSite US Stocks and Futures Market Preview for the week beginning Sunday, the 26th of November 2023, ending Friday, the 1st of December, entering the last month of the year already, 2023. Let's talk a little bit about what we're expecting just from a timeline perspective. Then we'll get into the charts, then we'll get into the news and see what we see. So, obviously, happy Thanksgiving to everybody. Hope you had a good Thanksgiving weekend. We did have our Black Friday specials. I hope some of you took advantage of that. Here's a look at the calendar moving forward. So we have a full week ahead of us. I will tell you that the levels for Monday, the futures levels, are based on Friday's half day, which means they're not very valid. I wouldn't go too crazy on them unless it's an instrument that traded all day Friday, like the Euro or something like that. But the ES and the NQs and all that type of stuff, probably less valid than normal, and I would be careful going too nuts on like value area plays and stuff like that. We can still do the opening range play. That's a standalone play. That's why we do that every day. But we can't really depend on some of these other levels. So just be aware of that. So then we have a full week ahead, and then we have 3 more weeks ahead till Christmas, and Christmas is on a Monday, as we've talked about. So no half day for Christmas Eve, Monday holiday for Christmas and New Year's, and then that last week of the year obviously is usually dead. Nobody trades that. And then we go into January, and we've got New Year's Day on a Monday, which is great because then we start the year for real on Tuesday, and we got 4 full days that week. So also from an expiration perspective, we have options expiration, which is a triple expiration on Friday the 15th here of December, and that means that the futures contract roll will be from Thursday the 7th to Friday the 8th. So get ready to roll your contracts then, and that means that Thursday to Friday will probably be a little awkward as usual. Month end for November is this Thursday, so statements print, and that can be a little awkward as well, but we'll see what we get. Here's a look at the euro dollar futures on the daily chart, and you can see that we've obviously made a rebound here off the lows, meaning the dollar is getting weaker and the euro is getting stronger. Same thing with the pound. Pound breaking new highs on Friday. So the dollar getting weaker here finally as some of the other interest rates adjust accordingly. Here's the ES front futures contract. This is the daily chart of the broad market in futures form. So, we've rallied pretty nicely actually off of that 9-bar startup phase and ran back up. From there, we're very near highs for the year. And again, this is the time of year with 1 month and a week left. If you're near the highs of the year in some of the bigger tech stocks, nobody wants to sell them and lock in their tax gain. And we'll look at those individual stocks in a moment here, but nobody wants to sell them and lock in their tax gain for the year. I would say this is a mixed year, even though the market's near highs. But nobody wants to do that. So that means that oftentimes we'll rally because we've got nobody wanting to sell. Here's the S&P 500 cash, about ready to break out to new highs, it looks like, right? We've had some gap days in the last few weeks, but this has been quite a rally to put us near the highs of the year. So obviously one of the stronger economies we've seen, and closing out high again one more time. Here's the ES intraday for the week in 10-minute candles. Also shows the prior. So this is a weird one, right? Because of Thursday being Thanksgiving and Friday being a half day. So Wednesday, Tuesday, Monday. So we're actually seeing the Thursday from the prior week, a little bit of Wednesday, then Thursday from the prior week, then Friday. And then you can see we opened flat on Monday and rallied. Tuesday gapped down dead flat. That should have been the exciting day of the week, and it wasn't. Wednesday gapped up, pulled back a bit flat. Busiest travel day of the year. We knew that was going to be dead. Thursday's Thanksgiving. We're closed, so it's just the futures for a couple hours, and then Friday also dead for a half day. So not much there. So it was a positive week in the markets from that perspective. NASDAQ side looks about the same. Here's the NASDAQ futures. So nothing really else to look at there. Now, we look at Bitcoin on the rise. Now, there's a 13 sell signal on the daily chart of Bitcoin, and we're still under the risk line, so just be aware of that. If that sell signal plays out, the target would be 28,000 or 26,806. But yeah, that's quite a rally from the 26,000 level we've had for months. So we're up to 37,800 almost now. TLT, the 20-year bond ETF, coming back up. So bonds up, rates down a bit off the lows, which means off the highs for rates. The VIX closes, though, Ick. We're closing out the year. This is a bad time of year for this, and this is not normal. 12.46. So we've got the lowest VIX reading we've seen in quite a while, which means there's no volatility in the markets, and that's not good for us. Usually, you don't like to see that in the December period. If I scroll this chart back and look at December last year, we were up in the 20s, and that's usually normal and good. But we're not seeing it right now, so that's not good for volatility, and that's usually what we like to see on the back end of the year. The advanced decline ratio has been back and forth all week. Nothing too spectacular. I say that. We had one of the biggest up days of the year 2 Fridays ago, but in terms of advanced declines, but generally speaking, back and forth. The trend closes at 0.92 on Friday, puts the 10-day moving average at 1.0, and that is not below the orange line. The 10-day moving average needs to be below the blue 0.85 number, and it's not, to get a sell signal on the market. So we're nowhere near that. ES front month futures contract. This is the the 10-minute candles. I looked at this already. Right, we already looked at this. Sorry. So there's nothing here really. Kind of uneventful. So it is what it is. Now, let's talk about some of these individual stocks on the daily chart. So Apple, not quite at highs, but almost. And when you scroll back to January, it's definitely up for the year. So, would you want to sell this stock and lock in your tax gains? Seems unlikely. Amazon at highs for the year and up again quite a bit. It was sitting down, split adjusted at 85. And now, so this stock's almost doubled again this year. Again, you want to sell that and lock in your tax gains. Probably not. Meta near the highs. Google almost near the highs. Goldman Sachs dead flat for the last couple of weeks. And when I scroll back, it started the year at 345, and we're currently sitting at 339. So basically nothing. If you own Goldman Sachs for the year, nothing happened. So that one's not one that they would worry about. Netflix at all-time highs. Tesla, not quite at all-time highs, but definitely up for the year. Nvidia, again, up for the year considerably. I mean, this thing came into the year at 140, and so this thing's like tripled, right? And so, again, do they want to sell this coming into the back end of the year, or do they want to wait till January to sell it, right? That's the question. Zoom has done nothing all year. First Solar down for the year. So, a couple of these big key tech stocks are up, and the indices are up. It doesn't mean anybody wants to sell anything right now. So that leads to, potentially the market rallying into December in the last few weeks of the year, because the big stocks are weighted into that, and so we shall see what we get. But again, it's an interesting time. All right, so in terms of economic data coming out this week, we've got the new home sales at 10 a.m. Eastern Time here in the U.S. On Monday, we've got housing price index on Tuesday at 9 a.m., consumer confidence Richmond manufacturing index at 10. Fed members are speaking a lot on Tuesday. We've got a rate announcement out of New Zealand Tuesday night going into Wednesday here in the U.S. Preliminary GDP, that's a second look at GDP for the third quarter on Wednesday at 8:30 a.m. Eastern Time, along with wholesale inventories and goods trade balance. Crude oil inventories at 10:30. Beige Book, the Fed Beige Book at 2. Then on Thursday, not much around the globe, and then U.S. has the PCE price index at 8:30. Initial and continuing jobless claims and personal income and spending at 8:30 Eastern Time. Chicago PMI at 9:45. Natty gas at 10:30. And then the unemployment rate out of Japan going into Friday. And on Friday here in the U.S., we've got the final manufacturing PMI at 9:45, ISM manufacturing PMI at 10, construction spending at 10, and Fed Chair Powell speaks at 11. So it's, there's some numbers there, but it's nothing major. But again, statements print on Thursday. That's the end of November. It's just a monthly statement print, not a quarterly or not a half year or not a year. No options expiration, no big GDP number, no Fed meeting. So it's going to be kind of light, but we shall see what we get. Charts as usual brought to you by NinjaTrader. If you've not yet taken a trial of our services, please feel free to check them out. We do have Black Friday specials running right now. They're on the website under the Black Friday menu. Have a great trading week.